Most people overcomplicate investing. Mutual funds are the beginner's cheat code. If you are letting your saving sit idle in the bank, you are losing money to inflation every single day. So what is a mutual fund really? It's a pool of money collected from investors to buy stocks, bonds, or other assets managed by professionals. Think of it like a group investing. Your money teams up with thousands of others to buy big things you couldn't afford alone. Why it matters? You get instant diversification even if you only invest a little. Pro tip: always check the fund's objective. It tells you where your money is going. Now that you know what it is, let's see why it's worth it. A single stock can crash. A mutual fund spreads risk across dozens or even hundreds. Most beginners make the mistake of chasing hot stocks. Instead, let the fund balance a risk for you. In fact, 8 out of 10 investors lose money trying to time the market. But who manages it? Let's talk about that. You are hiring a pro without the high fees. Every mutual fund has a fund manager making buy-sell decisions daily. This saves you time, stress, and costly mistakes. Check the expense ratio. Lower is better. Index fund often costs under 0.2%. Cool. But how do you make money? You earn in 3 ways: dividends, capital gains, and value growth. Reinvest your earnings and compounding kicks in. Set up systematic investment plan or SIP and automate your investing. It's wealth on autopilot. So what's next? If you want to build wealth without becoming a stock expert, mutual funds are your best friend.